Alrighty, so let's talk some stocks here. Revolve and Google McDougal. So, what's going on with these stocks? Are these buying opportunities? Are they selling opportunities? Or what do we have going on here? Revolve is first up here. Revolve, by the way, e-commerce company, big into the clothing space, not a big men's side of the business, caters much heavier to females, and average order volume is usually around $300-ish, okay? So, Revolve, here's the deal. Banger, grade A income statement. Not an A+, because revenue growth wasn't quite strong enough for an A+, and they did have general administrative, I thought was a little high, but grade A income statement here, $296 million in net sales versus $270 in the same quarter last year. Cost of sales went up, but not that dramatically, so gross profit actually went to $154 million from $141 million. Fulfillment, they actually brought that down on a year-over-year basis, which is pretty shocking considering revenue was about $26 million higher on a year-over-year basis. That's pretty crazy. Selling and distribution was slightly higher. Marketing was slightly higher. G&A was the one that was kind of negative. That was up about $5 million on a year-over-year basis, right? So total operating expenses came in at $139 versus $132 the same quarter last year. Income from operations went to $14.6 million versus $9.3 million. See, it's important you guys understand, if a business is able to watch their expenses pretty well, even off of a very small, relatively small revenue increase, right? Because Revolve's revenue was up what? What is that on a percentage basis? Is that like 9-10%, somewhere around there? Their revenue was up on a year-over-year basis. But look at income from operations. Income from operations is up like, what, 50%-ish? Like an incredibly strong number, right? So this, you could see companies that report 10% revenue growth and have 50% growth in income from operations if they're able to keep their expenses in check. And that's an important thing to understand, especially when it comes to turnaround companies, because you're going to see some of these turnaround companies like Nike and others where their net income increases 5x to 10x at the clip that revenue will increase starting in the back half of this year. So something to keep in mind there. Net income for Revolve came in at $11.4 million versus $10.8. Now keep in mind, it would have been a much more dramatic, increase on a year-over-year basis, but last year in the same quarter, other income came in at $5.3 million. So that made last year's numbers on the bottom line look much better than expected. So 16 cents of diluted EPS here for Revolve. Additionally, balance sheet's a banger. Cash and cash equivalents over $300 million. Total assets, $713 million versus total liabilities of $260 million. I mean, incredible. And here's the deal. This management team's damn good. They're damn good at Revolve, man. They're damn good. I've seen them get through a lot over the past few years, right? From tariffs, round one, to Rona, to then the super high out of control inflation, right? To then having to deal with now a new round. The management team is pretty dang good. And you got to understand, whenever you put your hard-earned money into a stock, right, into an investment, at the end of the day, you've got to feel comfortable that management team can weather any storm. And I could confidently say when I put my hard-earned money into Revolve, I feel very comfortable because that management team, they've proven they can get through whatever. And they'll make it out to the other side and they'll have the company prosper. And the company I look at today is stronger than any company I've seen in the past in regards to Revolve. And so they've done a heck of a job at this company. Now, gross margin, the only depressing thing is gross margin. They took that down because of probably the tariff situation. So they're expecting gross margins to be a little bit lower than they had initially anticipated, which is understandable if all the tariffs stick, right? General administrative expenses, they expect that to be slightly lower than kind of their range prior to that. And then effective tax rate, they're expecting that to be a little bit higher than what they were thinking before, right? That's going to move around. That's fine. At the end of the day, I feel very comfortable with Revolve, and I feel like that's a very, very good stock to own overall, okay? Next one up here, Google McDougal. So what's going on with Google? Why did this stock crash? Well, we all know in regards to Google, the government's still trying to think if they want to break up Google and how they're going to try to break up Google, all those sorts of things, right? So it's an ongoing saga that's going on. Now, Eddie Q was talking, from my understanding here today, right? Apple eyes adding AI search to replace Google. And this was a big thing, right? So Apple is actively looking at revamping its Safari web browser to concentrate on artificial intelligence-powered search engines and shift away from Google search, potentially creating a colossal shift in mobile browsing landscape. This disclosure was made by Apple's Senior Vice President of Services, Eddie Q. If you've been tracking Apple over the last 10, 20 years, you know Eddie Q very well. He's one of the most famous people at Apple nowadays. Outside of Tim Cook, he probably is the most famous person at Apple now. Because obviously Steve Jobs was always the most famous. And then after that, it was Johnny Ive. Obviously, Steve Jobs passed. Johnny Ive has nothing to do with Apple anymore. So Eddie Q, outside of Tim Cook, he's the second most famous person, I would say, at Apple nowadays. Eddie Q, during his testimony in the U.S. Justice Department's lawsuit against Google McDougal, the parent company of Google, according to Bloomberg, the lawsuit centers around an estimated $20 billion a year agreement that makes Google the default search engine in Safari on Apple devices. This legal challenge could potentially compel the two technology giants to dismantle their agreement. Now, my opinion on this is, I would love it. As somebody that just started buying Google stock, I would actually prefer this agreement to be tore up. I don't think it's worth $20 billion. Not nowadays. Maybe when Google was much newer, right? I think it might have been worth it at that time. There's a lot more to lose from Apple's standpoint than Google's standpoint. That's a lot of dough. $20 billion a year? A year? For Apple, that's like straight profit, right? And that's going to be hard to replace that $20 billion, I can tell you that much. On the flip side, for Google McDougal, right, there would be just a huge windfall of income from operations. At the end of the day, personally, I don't care if Apple stops using that. I use a Google search app all the time on my phone, all the time on my iPad as well. I don't need to do whatever some people do in regards to Safari. So could it hurt Google business in some way? Yeah, but I don't think the dent is even close to being $20 billion dent to Google. It's much heavier in regards to, if you're an Apple shareholder, I think this is something I would be much, much, much more paranoid and scared over, right? Now, additionally, Eddie Q also had some things to say that could be even more worrisome, I guess, in regards to kind of Apple and Google. One is, Eddie Q said, you may not need an iPhone by 2035, right? Which is not going to be good, because that's the one thing that is keeping Apple, at a $3 trillion market cap. The fact that iPhone's at the center of all these other technologies that then you end up buying because your life's just easier. If you have an iPhone, it's easier to just have an iPad rather than some other tablet. It's easier to have a MacBook, right? It's easier to have AirPods and all this stuff. If that ends up happening, Apple's in serious trouble. Apple will be a stagnant stock for decades to go in the future, or a downtrending stock to go for decades in the future, if that was to actually happen, by the way. Now, he also said something that was a little scary in regards to Google search. So from my understanding, what he said to the government was, Google search on Mac has dropped recently, right? For the first time, and I believe ever, or something like that, he was saying, right? And so that would mean chat GPTs and those sorts of things are starting to take at least some sort of market share from Google search overall, right? Which is the ultimate scary thing and the thing that's clouding over Google right now, right? Now, keep in mind, a lot of this has been priced in now at this point in time. Google's at a forward P of 15. 15. Listen, a lot has been priced in. But with that being said, in regards to Google McDougal, that does not mean everything has been priced in. A lot has been priced in for sure, but I don't know. Here's the deal. I watched Apple stock many years ago. Actually, it was probably almost 10 years ago now at this point in time. I watched Apple's, probably wasn't 10 years ago, maybe 8 years ago or so. I watched Apple stock get all the way down to a forward P of 12. I watched Meta stock in that whole situation that happened in 2022. I watched Meta stock get down to a forward P all the way down to 12. So is it impossible to see Google go down to a forward P of 12? No. Let's say in a few months from now, the stock market starts crashing again, starts falling a bunch, whatever, right? Who knows? It could happen tomorrow, next week, whatever. Is it possible that Google in that sort of situation could all of a sudden, go to a forward P of 12? It's always possible. Don't bank on it, though. Don't get greedy with it. At the end of the day, if you like Google at a forward P of 15, you got to buy it, right? You can't just hope that, maybe it will go down to where Apple went down to that one time, or Meta. Might not happen, right? But the moral of the story is Google's growing double digits top line, double digits bottom line, forward P of 15. And keep in mind, Google's a beast of a company. You're talking about Google search, the dominant search engine, which is the whole, theory around this whole monopoly they have and all that stuff, right? 90% market share in search. So they have that. Then they have YouTube, which is an absolute juggernaut, which then also has YouTube TV, right? They have Android, which has complete dominant market share in the smartphone industry around the world, right? They have their cloud business, which continues to grow, and that's becoming a profit machine. They have Gemini, which, I'll be honest, I use Gemini. I'm very impressed with what they've put out there in regards to the Gemini product. And, everybody wants to annoy ChatGPT as the winner. Listen, man. Listen. Before I started using Google Search religiously in college, prior to that, I used to use Yahoo Search. I used to use AJ.com, Ask Jeeves, right? And so just don't automatically think like, oh, ChatGPT is winning right now, so, they won that war over the next 10, 20 years. They might have, but they might also lose it to Gemini, just as Google came out and knocked everybody else out that was trying to compete in search. And remember Bing, and all these other products that, ultimately Google ended up winning over time, right? So keep that in mind. Gemini might end up actually winning long term. And if they do, obviously it's a huge opportunity for Google, right? Also, Waymo, right, which is clear winner in regards to, self-driving vehicles and robo-taxi opportunity, right? They're the only ones in the marketplace that are doing, how many driverless rides is Waymo going to give today? I don't know, 1,000, maybe multi-thousand. I don't know. It's going to be a lot, right? Just today. And they're going to do even probably more next week and probably even more the next week, right? And who else is doing that? No one, right? No one's giving driverless rides like that out right now in that sort of volume. No one. And so I think that's and they got so many other businesses and so many adjacent businesses off of these businesses. It's incredible. So Google's a beast business model. They didn't get to a $2 trillion market cap by accident. So, keep in mind, Google's looking good, okay? But that doesn't mean short term can't go down even further. We've seen it before. Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy. The Honest Company. Ticker symbol this one is HNST. This is around a $4.40 stock as of here today. In the past year, the stock is up about 50%. And this used to be about $1 stock just a few years ago. But they have come a long way, and they got a long way to go in regards to this story here. Okay. Now, Honest Company. You might look at this business model and you say, okay, diapers, wipes, baby care products, lotions, soap, stuff like that, right? Beauty-related products, skincare-related products, some makeup products, right? You might look at this company and you say, like, what's the big deal? Seems like kind of a boring company. Like, a stock like this could not provide great returns, right? Like, it's just such a boring company, like, big deal, right? No. They did a study recently on the top best performing stocks of the past 25 years. And what they found is almost every single one of the best performing stocks, nice Lamborghini just passed by, almost all of the best performing stocks of the past 25 years, guess what they all have in common? Boring, put you to sleep companies. If we look at the top stock, right, that has returned a shocking 124,000% over the past 25 years, It's an energy drink company. Big whoopee. Okay, we put a bunch of caffeine and sugar in these things. Wow. Okay. Then we have NVIDIA. We say, okay, that's really an exciting company, all these big chips. You know what next is? Texas Pacific Land Corporation. Could you think of a more boring business to possibly own? You know how much that stock's returned over the past 25 years? 66,000%. Next one up here is a boring shoe company called Decker's Outdoor Corporation. It's up 50,000% in the past 25 years. Next up, FICO. You ever heard of your FICO score? I hope you have. Everybody watching this video right now, you should have heard of your FICO score before. Fair Isaac Corporation, which has a FICO score, 37,000% return in the past 25 years. Next one up here, Old Dominion Freight Company. Old Dominion Freight Company, does it get more boring? 32,000% gain. Tractor Supply Company, this list is phenomenal. 25,000% gain in the past 25 years. Next one up here, O'Reilly Automotive. You know, like the commercial, O'Reilly Auto Parts. That company, 20,000% gain the past 25 years, right? Life-changing stocks. You run the math on this, you could have put 10K into these companies and just got ridiculously rich. Never mind if you put 50K, 100K, 200K. I mean, unbelievable. So the moral of this story is, don't ever cast aside a company and say, this is a boring business model. This could... No. Everybody wants to try to find the next company that's going to be making, products on Mars. And they're investing in all these crazy things when a lot of times the best investments you will ever find in your life are the most boring, basic companies that are just become beasts over a 25-year span, right? Now, to take things up here, there's been a very important switch that has happened with Honest recently that is going to give it its next leg much higher in regards to the stock. So, I graded their latest income statement. It was a B+ grade income statement, which is shocking because if I take you back 2 to 3 years ago, this company was reporting nothing but F grade income statements quarter in and quarter out. It was an unmitigated disaster of a company on the financial front. And now they're almost gotten to grade A. It's like a student that was just horrible in school. And then suddenly you're like, oh my gosh, like they're almost about to become a straight A student. Like this is ridiculous. Like what a turnaround, right? Revenue in the latest quarter went to 97 million from 86 million the same quarter last year. Cost of revenue went to 59 mil from 54 mil. So they kept that pretty in check. Gross profit, $37 million from $31 million. Selling general administrative expenses, they actually dropped that on a year-over-year basis. So their revenue was up, we can call it $11 million on a year-over-year basis, but SG&A was actually down for the company year-over-year. Now, they're spending pretty aggressively on marketing right now. That went to $12 million from $9 million. So, but that's obviously working, right? Look at the revenue numbers. Research and development up very, very slightly here. So they kept their expenses in check pretty well. Operating income, folks. We're talking operating income for Honest now. Not operating loss, operating income of $2.5 million from a $1.3 million loss. If we look at net income, $3.2 million versus a $1.4 million loss and actually a positive diluted EPS, right? Crazy how much this company's turned things around. But keep in mind, this is just infant stage of this whole profitability cycle. We're still really, really early days in regards to this, right? Now, if you know like what makes a company really special, I can tell you what it is. A company that has revenues going up, margins going up, profits going up, and EBITDA going up. And what do we find with Honest? It's all happening. Revenue up 13% in the latest quarter, right? Margins increased to 38.7% from 37%. Net income went to increased $5 million to $3 million profit versus a net loss of over $1 million. And then adjusted EBITDA was $7 million compared to $3 million in the same quarter last year. So everything you want to see on the financial front is going correctly, right? But it's not just that. The balance sheet is now like a Fort Knox of cash on this company. They're now sitting on $73 million in cash and cash equivalents with no debt. Now, what do we think that cash balance is going to build to a year from now, 2 years from now, 3 years from now? Now we're talking about actual profitability with this company. Oh my gosh. 73 mil with no debt? Keep in mind, this is a super small market cap company. I mean, the market cap on Honest is probably it's under $500 million. It's like a $400 million market cap with 73 million cash and no debt. They also just reaffirmed their full year 2025 outlook. Now, keep in mind, they're probably going to come in and beat these numbers. They're probably going to come in. You know how I know that? Well, guess what? They do it almost every quarter. Oh, matter of fact, Carla has 7 straight quarters of double beats. Carla, the CEO of the company, 7 straight quarters. Look at this. 3-cent EPS beat, 9 cents, 7 cent, 1 cent, 3 cent, 1 cent, 3 cent, right? Look at the revenue. About a $4 million beat, $6 million, $3 million, $6 million, $6 million, $3 million, $5 million. If there's a company you can count on that's a small cap company to come in and quarter out and beat whatever their guidance was, you're looking at them 7 straight quarters of double beats. I mean, usually these small cap companies are super inconsistent. Carla's running this company. She's running the show as if this was like, she's running Procter & Gamble over here or something. This is unbelievable. Now, let me show you the old Honest that took this stock all the way down to $1 at its lows. Look at this. Miss, 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 double miss, double miss, double miss. That's the old Honest. And this is the improvements Carla's made with the business model, where it's now a company that you don't have to stress over when they come in with earnings season and think, oh gosh, they're going to miss their numbers again. This is going to be awful, right? Nope. It's such an anti-stress stock now at this point in time, right? Which is a valuable thing whenever you're making an investment, to be able to trust that a management team is going to come in with at least the numbers they say they're going to do, or likely better numbers. And that's what ends up happening quarter in, quarter out, right? Now, there's 3 scenarios I see for Honest in regards to where this stock price is going, okay? So scenario number 1 is this company over the next 3 years, right? So if we look out 3 years from now, we can look out to like 2028. Scenario 1 is this company gets to around $50 million of net income a year, right? I don't see that being an issue whatsoever, given the progress this company's been making and seeing where that bottom line's been going, understanding where that revenue is likely trending over the next 3 years. So $50 million in net income should be easy peasy lemon squeezy for this company. If they're doing $50 million a year in net income, you put a 20 PE on them, which would be very, very fair for a company like them. If they've got strong growth rates, they should be commanding way over a 20 PE at that particular time. But, let's just say growth is really slow, but they got that $50 million consistent net income. 20 P is fair. You put it at $1 billion market cap. That's a 2x from here. Actually, it's technically over a 2x from here, okay? Because the market cap right now is in the 400 million-ish range, okay? Second scenario I see for this company. This is, I think, I would put the highest odds of a probability are kind of on this scenario, personally, okay? This is where the company gets to $100 million of net income per year, okay? Now, you take that $100 million. If, once again, let's say the growth rates are really slow, so they only can command a 20 P at that particular time, right? That's a $2 billion market cap. That's over a 4x on the stock price from here. Over a 4x, okay? Let's say things go really good. They get to $150 million of net income a year, 3 years from now, right? And let's say the growth rates are really good still. Let's say they're growing like 10 to 15% revenue top line, right? Then you could command probably about a 28 PE ratio, somewhere around there, right? Which would put the company at about a $4 billion market cap, which, from this is an 8x to 10x on the stock over the next 3 years, right? That's kind of the most bullish scenario there. So you can see, like, Honest, it might seem like, oh, this is a boring business. The gains in Honest have not been boring the past few years. And I don't think the gains over the next 3 years are going to be boring. I think it's going to be very, very exciting. And people sometimes look back at these stocks and like, it seemed like such a boring company. Like, what's the big deal, right? And keep in mind, that's how a lot of people view it before they really understand what's going on with the company, right? It gets more exciting. Like even Palantir a few years ago, people were talking about Palantir as this boring company, right? Oh, so what? They're helping the government out with some data. Okay, big deal, right? Now people are like, oh, Palantir is so exciting, right? But it's because the stock prices went up for so much. Elf, when I was buying that stock for $7 a few years ago, right? Well, shoot, that's a lot of years ago now. What is that, 6 years ago or whatever, right? When I was buying that stock for like $7 a share, 6+ years ago, you could have said, big deal, makeup company, so boring. The gains aren't boring. The money's not boring, right? That's all that matters in the end. Now, let me show you another way to think about this situation. I think this is going to be very valuable for a lot of folks to understand what I'm about to go through right now in regards to where Honest stock is going, okay? Listen, If you want to compare Honest versus Procter & Gamble and Kimberly-Clark, you can, I mean, one of the only services, if not the only service you can really do something like this on is 1000xstocks.com, right? So you go to 1000xstocks.com, you go ahead and compare these three companies, right? First off, Honest is growing at a much more rapid clip than Procter & Gamble and Kimberly-Clark. Kimberly-Clark and Procter & Gamble look like they're going the wrong way, right? Honest is actually putting up nice growth rates, including an acceleration last quarter of up to 13%, right? Now, since Honest is just starting to flip over to profitability, you could say, let's value these companies on a price to sales ratio rather than PE ratio, right? Which is completely fair. Here's the deal. The forward price to sales ratio against Procter & Gamble and Kimberly-Clark, which are probably the two best comps for a company like Honest, right? Forward price to sales ratio on Honest is 1.18. Procter & Gamble is 4.22. Kimberly-Clark is 2.26, okay? So basically, Honest would have to like 4x or so its stock price, so go from $4 to, we call it $16 or so from here, just to get up to Procter & Gamble's price to sales ratio. It would have to 2x from here just to get to Kimberly-Clark's price to sales ratio. Now, I also think it's very unfair that Procter & Gamble and Kimberly-Clark would even have a higher price to sales ratio. Why should they? They have way less growth. And they're way less exciting in business models than Honest that's actually putting up great growth. So if anything, Honest and Honest's balance sheet looks superior to Procter & Gamble and Kimberly-Clark when you look at what their cash balance is versus their market cap versus what their debt is, right? So honestly, Honest should be having a price to sales ratio superior to Procter & Gamble, which would mean the price to sales ratio should really be like 5 or 6 right now, right? So when you look at it from that standpoint, you can really understand like Honest, oh my gosh, like this is got a long runway of stock price gains ahead, right? Now, additionally, when it comes to management team here, right, I told you guys about Carla. She's done a phenomenal job turning this ship around. I mean, gosh, you know, when she joined the company, it looked like the Titanic. It looked really bad. It was a really ugly situation, and she's turned this show around. But it's not just her. This Kate Barton the company has, which she's the chief growth officer. She's been doing a phenomenal job as well. And I remember, like, I think it was either last year or maybe it was 12, 18 months ago, she like made the higher end management team these hats that said like EBITDA on them or something like that. And I was just loving it. I was like, dang, man, like that's what I'm freaking talking about, right? Dave Loretta is going to be leaving the company, the CFO. And they already got the new gentleman who's coming in who looks like he has a lot of experience. Looks like he was very high ranking at Hanes Celestial here very recently. But the moral of the story is I think the two individuals that are really running this show from the Titanic to, you know, we can call it a beautiful Royal Caribbean ship now at this point in time, I think it's really Carla and Kate. And so as long as Carla and Kate are there, I feel very comfortable investing into the stock, buying the stock actively, and looking forward to, you know, a lot of gains in the stock over the next few years. So really exciting in regards to Honest, okay?